Okay, folks, welcome to Swing Trading Today. This is where we review the pre-market activity. We're going to kick things off today with first the economic data, then we're going to segue into the pre-market activity, and then we will finish things off with our members' stock chart request, which is where we review the symbols that our members submit for me to review on video. Let's get to it. Today is Wednesday, November the 28th. It is at current 4:35 in the a.m. Eastern Standard Time. Let's kick things off with the economic data coming out this morning, and that is the GDP report, widely expected to come in at a quarter-over-quarter rate of 3.5%, which is a notch back from the 4.2 from the prior read. We're also going to get a speech from Jay Powell at 12 p.m. Eastern Standard Time. We're also going to get some mortgage data at 7 a.m. Applications are expected to come in negative. No shock there with the weakness in bonds and strength in yields, pushing yields on long-term rates higher. And that's not going to change anytime soon, because while it's great that the Federal Reserve may pause on raising rates, that only affects the short-term bond yield, not the long-term. For them to affect the long-term bond yield, they need to go back into the market and begin open operations yet again. And I just don't think that we're there yet. Now with GDP still trending up. Let's get to the pre-market activity. We'll begin with the US dollar. The dollar, which is at current poised, this is a 4-hour chart. These will all be 4-hour charts, is at current threatening to take out prior highs at 97.7, right about here. And if we break through this level, which there is a lot of resistance above, you can expect more short covering on the US dollar. What will influence the US dollar? Well, Jay Powell's speech today, as well as the GDP report. If it only comes in much weaker or much stronger than expected, one of the two. I think that if we're on or about the consensus number, not much is going to happen. What will also influence the US dollar are continued olive branches being extended in advance of the meeting between President Xi of China and President Trump. And the markets are hoping for some sort of a trade deal between the two. Moving on to gold. Gold is lower this morning. I don't expect much from gold over the next several days unless, of course, we get an event. What would that event be? Either A geopolitical event, which results in fear, or if we get a trade deal or a signal that we have a trade deal, that will weaken the US dollar and that will send gold higher. But until the Federal Reserve meeting is in the rearview mirror, we will probably see lackluster price action for gold, silver, the miners, etc. And typically after a Fed meeting where they raise rates, while you get an initial knee-jerk reaction to the downside for precious metals, you get a subsequent rally. So we will be looking for that rally fairly soon. So at current, gold is down in the pre-market, and not by much, by 0.6%. The S&P 500 is up this morning. Let's clean this up here a little bit and draw some new levels. Okay, so again, this is still a 4-hour chart, and 'tis the season for a rally, right? So this time of year, as we move into December, we get the traditional Santa Claus rally. I see no reason, especially after the sell-off that we've had of late, why we wouldn't get a Santa Claus rally. You still have money flows moving into the markets with IRAs, late year 401k contributions, and that money needs to get put to work. Now on this 4-hour chart, you could see that we broke out on the 27th. We're consolidating. I think we press higher from here and we get a rally. There may be some backing and filling. I won't deny that, but I think that net, this time 2 weeks from now, we'll see net accumulation, net gains on the S&P 500. For that matter, we'll take a look at the Nasdaq. You can see here that we're at a bit of resistance on the Nasdaq. Let's clean this up. Okay, so you can see that we have a higher low. We broke out here on the 27th. We are now leaning into the third standard deviation Bollinger Band in red here. We may get a pullback. That's fine. I think that a pullback can be bought on the Nasdaq. We're having a fairly good session this morning, up 0.16%. Remember the GDP report coming out later today, prior to the markets open. Let's take a look at Salesforce.com. Salesforce reported earnings after hours yesterday, and man, the markets really welcomed their report. So we have cleared overnight anyway resistance level number 1 and resistance level number 2. So what I'd like to see here, given the fact that, pardon me, my voice is going again, given the fact that we are trading above, at current on a 4-hour chart, above the third standard deviation Bollinger Band, we're probably going to get a pause. We're going to digest these gains. That's a good thing. And on that digestion of gains, if the market holds up, we'll be looking to open up a long trade on CRM. But we need to get a pullback first, because the last time, as you can see back here, we were trading above the third standard deviation Bollinger Band, we got a pullback. Same deal back here. I'm not saying we're going to resume the downtrend. All I'm saying is we're going to get a pause that refreshes. We want to digest these gains, and that will be our opportunity to get long of CRM. So this morning, looking very sharp for CRM. Let's move over and into members' stock chart requests, which is where we review the symbols that our members submit for me to review on video. The first chart up is going to be Netflix. So I haven't spoken about Netflix in quite a while because I have been bearish on the name. Why is that? Well, on a weekly chart, which is what you're looking at, we had a double top, a lower high, and we broke down below a key support level at 310.93. That is a new downtrend, and we have been, since that point in time, putting in lower highs and lower lows. Thus far this week, we have a bullish key reversal on the week. It's looking very, very good. So I think that we may get a rally on Netflix, assuming that this bullish key reversal, which would imply that we have support at the 250 level, will hold up. So members, we're going to talk more about Netflix and the possibility of a long trade here very, very soon. Daily chart. Again, we have a series of retests of support at the 250 level. We are beginning to put in higher lows, like right here. We have the 50-day moving average, which has now crossed down below the 200-day moving average. That is in the rearview mirror. That event has occurred. No longer do we need to worry about it until such time as we rally up and into those moving averages, because now they will act as resistance. So what we're looking for here is a breakout on either A, our forward-looking indicators, RSI and stochastic, or B, on price. And we're looking for that breakout to occur on volume, and we don't have that yet. So while I'm bullish on Netflix for a short-term swing trade, not an investment, but a short-term swing trade, we're going to proceed with care. I want to wait for a breakout. So members, more to come. The next chart up, BHP Bulletin, daily chart. What we're seeing here on a daily chart is a trading range. We have a high of $50 to $51 per share. We have a low of $43.18 to $43.71. Yesterday, we bounced off of the $43.65 level. So we're very close to the lower band of that trading range. Now, if the dollar continues to spike higher, that's going to add pressure to BHP Bulletin. But if the dollar pulls back, that should add a little bit of rocket fuel for BHP. I don't see any reason why these shares should not continue to respect this trading range. Let's go to a weekly chart. So the weekly chart, you can see that we are approaching the lower band of support. My mouse is skipping around here. I apologize. The lower band of support is at 43.71. We're right and about there. We can proceed lower down to that $43.19, $43 per share level. I'm expecting a bounce here on BHP. Again, folks, this is not an investment. It is a short-term swing trade. I would use a stop right below $43 per share on a closing basis. Beware here, we have stochastics trading down below the 50 level, which is very, very bearish. So if you see a spike in the US dollar on strong GDP growth, I would avoid these shares. However, if they come in weak, well, then you have the probability of the US dollar weakening a bit, and that sets you up for a better risk-reward entry point. DVMT, Dell Technologies. We're going to go over a daily chart here. I'm a bit concerned in that we are seeing lower highs on our indicators, RSI and stochastics, as well as price. We have a prior high of 107.22. We have a new lower high of 105.69. And yesterday, we closed down below the lower band of the rising uptrend channel. Does this mean you go shorting the shares? No. Does this mean that we may get a potential pullback? Yes. Now, when do we take those fears and put them aside and we begin to look at the long side for DVMT? Easy. When we get a rally up and through 105.69 and we appear poised to close there. It doesn't matter where we trade intraday. What matters is where we close. So DVMT, short term, very short term, I'm a little bit bearish. However, that could be easily assuaged if we get a rally up and through resistance. Longer term, if you're taking a look at a weekly chart, the trend is still up. We're a bit extended here relative to the 2 standard deviation Bollinger Band. We're trading right above it, and we're not supposed to be there. So I think that a pullback will be healthy for these shares, and we could quite very well see a continuation rally in the coming weeks. But short term, I'm a little bit bearish, but it's not a short. Etsy, weekly chart. Okay, so we are in a tight triangle formation. It's all about the weekly chart with Etsy. We did break out several weeks ago, right here, the week of November the 5th. The following week, we broke down. That is a bull trap. So a lot of bulls got caught up in this breakout. So we should expect more resistance above, because not only do we have sellers from November the 5th waiting to get made whole, we also have buyers from back here who bought in anticipation of a breakout between the week of the 10th of September through the week of October the 1st. They're going to look to get made whole as the red entry on their trading platform turns green. They're just going to sell. They don't want to make money because they sat through this sell-off. They just want to get made whole. Now, we do have a higher low forming on RSI. We're rolling over on Stokes, but it's midweek. A lot can happen by the end of the week. So Etsy is looking good, daily chart. On a daily basis, we broke out last week. Yesterday, we saw some topping action, some sellers moving in and taking advantage of strength. Now, I mentioned earlier that we have overhead supply, and I think that's what you're beginning to see. Are these buyers from back here and back here? They want to get made whole. They just want their money back. So expect some backing and filling here. I don't think it's going to be a straight shot higher absent some news on Etsy. RSI, higher lows, good stuff. Volume is a bit light. We're going to need to see volume pick up to get through this overhead supply. FTNT, Fortinet Inc. So the weekly chart, you could see that we've been in a downtrend for a few months now, since September. And every time we rally, we sell off. And that, of course, is a sign of weakness. Last week, we sold off really hard, but we bounced off of 64.65. Now, what we're trying to do is recapture support or resistance at current at 71.54. So we are in no man's land. You really can't open up a new long trade here because you're opening it up right into resistance. That is not the best strategy to take. I would rather wait until we recapture support level and then buy. The problem is that once we recapture support at 71.54, you're going to have this declining upper band of resistance to contend with. So, would I buy these shares right now? No. Too much risk, not enough reward. Daily chart. Now, here is our downtrend channel as visualized on a daily basis. In solid blue line, we have our extreme upper band of resistance. The solid line at the bottom reflects the lower band of extreme support. So we bounced off of that support level last week, and we closed above yesterday, actually the day before, this dotted blue line, which would mark the mid-range of resistance on a daily chart. So we may rally. If you're a short-term swing trader, you're looking to put on a trade and scalp a couple of bucks, we may rally up to this upper band of resistance. But to gamble, and I'm using that word purposely, to gamble that we're going to clear that resistance level is not the wisest thing to do. Now, if we manage to rally and close above the resistance level, then you could look to open up a long trade. But right now, the only trade I see to the long side here is a purchase at or where we closed yesterday with a stop right below the day's lows. If we close back and down into this trading range, that will be a problem for these shares, and they'll probably proceed lower. So I would stop out on a new closing low below this lower band of support, and I would expect a rally up and into 74.50 as a short-term swing trade. Expect resistance at that level. So you may want to look to scalp a profit and then wait to see whether or not it closes above resistance. If it does and it retests that support level successfully, then you could look to buy the shares for a longer-term swing trade. And that is it for this morning, folks. Everybody have a profitable trading day, and I'll talk to you soon. Be well.